All right, guys, welcome to another freight market update. This one is for July. My name is Greg Amanatides, and I'm joined by our head of ocean product, Yanis Papanthimos. As always, we will be starting off with the traffic light system, which is around the ease of access to space. So green is booking with, as normal, 2 weeks in advance. Orange or yellow is booking 3 weeks in advance, so slightly more difficult. And red would mean that you would need to book over 3 weeks in advance. So let's start off with China into Oceania, Australia, New Zealand. What's happening on the Australia New Zealand front, Yanni?
It's quite tight at this stage. That's definitely a fact, and this is mainly related with a lot of blank sailings that have happened or are going to happen over the next couple of days, if not weeks. As such, the carriers that still have schedules are extremely tight. We have seen most of them being under a rollover situation, meaning they have exceeded their capacity on each vessel and they have to roll cargo. As such, at this stage, for the first fortnight of July, we would expect a red light. But the thing is that demand doesn't seem to be
matching.
Correct. So most probably, as we progress towards the middle to the end of the month, this will turn into a yellow/orange.
Okay. So because of that soft demand, it would have been red, but we're okay with 3 weeks in advance for this.
Because the blank sailings are going to ease after the next
first 2 weeks.
15 days. So since the capacity is going to pretty much ramp up, with the demand not matching, it would be much easier to get there.
Now, on the Trans-Pacific trade, eastbound China to the USA, what's happening on that front? Where are we in the traffic light situation there?
Well, what is happening is pretty much what we're expecting to happen. Meaning, once the new tariffs were announced, we had a barrage, a massive blank sailing schedule, services cancelled and stuff like that. Then we had that, let's call it the tariff truce, for 90 days. And as expected, everybody was saying that we would expect the demand to start to ramping up, and at the same time, so would rates, because the capacity that was pulled wouldn't be going back into the service, into the TP service that far.
Straight away,
Now we are at a level where the capacity has matched demand. And for the last 2 weeks, we have seen the major rate indexes, and I'm referring mainly to the Drewry one and the Shanghai Containerized Freight Index.
SCFI,
They have seen massive drop-offs. Because rates increased significantly.
They spiked and now they've eased.
And now they are going down.
So on the traffic light system, green or orange?
Let's go with orange, but again, the more we progress into the month of July, most likely we're going to turn into green, unless, of course,
something happens with the tariffs.
Which on the TP, it wouldn't be a surprise. We shouldn't be surprised.
Perfect. Now, on the Airfreight front, I spoke to our Global Director of Airfreight, Alana, earlier this week, and this is what she had to say.
So, Alana, there's been a lot going on in your space recently, obviously with the conflict in the Middle East. I know that there was a temporary closure over a lot of the Gulf countries, which are major hubs, and that has since been lifted. What's the situation like at the moment, and how might you expect it playing out in the rest of July?
Yeah, so you're right. The Middle East conflict has caused major airspace closures, and especially around key hubs like Dubai and Doha. And even though flights have resumed, there is still a ripple effect that's playing out. So rerouted flights obviously mean longer transit times, high fuel loads, and that means less weight for freight as well. So so for us in Australia, it's a big deal because we rely so heavily on those hubs. So at Navia, we acted early, and we shifted a lot of the volume away from those high risk zones, and we rerouted through Hong Kong and Singapore and even North America where we needed. So we weren't really waiting and seeing and delaying cargo. We were still uplifting, and we moved fast, but we do that every time we see disruptions So we do still keep freight moving, but globally, we'll probably see some delay still happening on those Middle Eastern carriers while they catch up from the delays. They've obviously got freight sitting in hubs that they haven't uplifted. So I would say 7 to 14 days for us to start considering the Middle Eastern carriers again.
Cool. And so a couple of weeks there before things start to even out. What about on the China-US trade? I know that we've got the 90-day pause in tariffs coming to its end really soon. So what do you expect in July on that front for our US customers?
Yeah, so I think heading into July, with that obviously in the works, I think we're going to see a surge in demand. This tariff pause nears its end, and we're going to expect more front loading, especially from major e-commerce exporters in China. Yeah. And then there's also a bit of a concern that if talks break down or there are new tariffs introduced, there'll be a sharp spike in rates, and space will be really difficult to secure as well.
Right.
It's important that we look at what happens in the e-commerce market as well, because it does affect so much of what we do. It really accounts for about 50% of the total uplift between the two countries, China and the US, which makes it one of the most e-commerce heavy trade lanes globally. And it is the core driver of rate pressure. So you'll probably see Navia write a lot about what's happening in the market and e-commerce specifically. And we've already seen a bit of a bounce in the China to the US spot rates. They rose about 14% in early June, but the trend is still down from April's seasonal peak. So there's a disconnect between available space and confident long-term planning as well from shippers. So the market's reporting not as many long-term contracts have been drawn. And what drives that as well is just the sudden changes we're seeing in the trade policy. That's obviously a big contributor. The de minimis that happened in April, it's a really, really good example. So that basically hit overnight with no lead times. And we're seeing a lot more cargo moved by air, and not because it's ideal, it's because, it's the only way that suppliers and buyers are trying to beat this tariff.
Get in early.
Yeah, and avoid the uncertainty. But it's just where possible, shippers need to be flexible in transit. This environment gives very little room for us to react late. So yeah, our strategy really is to try and be proactive with the planning. So in short, yes, I expect July to be busy, but that demand is driven more by anxiety than confidence. And that tells you a lot about where the market sits right now as well.
Awesome. Thanks for that, Alana. We will see you next month.
You're welcome. Thank you, Greg.
Now, Giannis, coming back to sea freight, I just want you to touch on for me, if I'm a supply chain manager in July, let's maybe break it down. First 2 weeks, what should I be doing? And then second 2 weeks, what should I be doing?
First 2 weeks, I would say that it is already a little bit late for those who haven't placed orders.
Yep.
The main thing for the first weeks is to get the space.
Okay.
Space should be on top of rate.
Yep.
Second half of July, if things go
space on top of rate. Yep.
If things go as expected, we should return to a level of normality.
Yep.
Where supply chain manager would have to honor the named account agreement, and the carriers from the same time would be able to provide space.
Yeah. But I guess it all depends on what happens on the tariff negotiations.
That's on the TP, right?
Yeah.
It's a gamble that I think no one can take a safe bet on.
Yep.
Because the goalpost keeps changing. So I think it was last week or the week before that the Trump administration mentioned something about an agreement.
Yep.
We haven't seen anything tangible, so it's anybody's guess.
Beautiful. Thank you, Giannis. Insightful as always. We'll see you all next month.
Thanks, everyone. Thank you, Greg.